let's be honest. For most business owners, rent feels like you're just throwing money away, right? It's a total black hole. But what if? What if you could take every single one of those rent payments and funnel them into an asset you actually own? What if your biggest expense could be flipped into your greatest retirement nest egg? Well, that's exactly what we're diving into today. This incredible strategy of using your super to buy your own commercial property. Sound familiar? Every single month, a huge chunk of your hard-earned cash goes straight to your landlord. You're basically paying down their mortgage, building up their wealth, and what do you get? A receipt? It is so frustrating. But here's the good news. It's a cycle you can absolutely break. Okay, just picture this for a second. Instead of paying a landlord, every rent check your business writes goes directly into your own retirement fund. It's paying off a property that you will own. That is the massive shift we're talking about here. It's a game-changing strategy that literally turns a business liability into a powerful personal asset. Your company's address becomes your retirement plan. So you're probably wondering, how on earth is this even possible? Well, the secret lies in a very special type of super fund. Let's talk about the engine that drives this whole thing, the self-managed super fund, or as you'll hear it called, an SMSF. So, what is an SMSF? The easiest way to think about it is like your own personal, private super fund. It puts you in the driver's seat. You're not just a passenger in some giant faceless fund anymore. Nope. You are the one calling the shots, deciding exactly where your retirement savings go. But, and this is a big but, with all that control comes some pretty serious responsibility. You are legally on the hook for every single decision and for following some very strict rules. Okay, so how's this different from the regular super fund you probably have now? Well, with a standard industry fund, right, some professional trustee is making all the investment choices for you and thousands of other people. But with an SMSF, you are the trustee. You're basically swapping being a passive passenger for being the active pilot of your own retirement portfolio. And yeah, that's a huge shift, not just in workload, but in your whole mindset.
All right, I know what you're thinking. Why would anyone take on all that extra hassle and responsibility? Well, the answer is simple. Because the payoff, especially when it comes to buying your business premises, is, well, it's absolutely incredible. Let's get into the numbers, because this is where it gets really exciting.
Okay, here is the first magic number you need to know. 15%. Just 15%. That's the concessional tax rate on the rental income your business pays to your SMSF. Now stop and think about that for a second. Your personal income tax rate could be as high as 45%. So right off the bat, you are looking at massive, year-after-year tax savings. It's a huge deal.
But wait, it gets even better. Seriously. This is the end game. Once you retire and your SMSF switches into what's called the pension phase, that tax rate drops to zero. That's right, 0%. Zero tax on the rental income and zero capital gains tax if you ever decide to sell the property. It is, without a doubt, one of the most powerful wealth-building tools out there for retirement.
So let's just pull all of these incredible benefits together, shall we? You've got the huge tax savings, that's a given. But you're also building a kind of financial fortress around this asset. It's often protected from business creditors if things, ever go south. Plus, you're giving your business the ultimate security. No landlord can ever kick you out or hike the rent unexpectedly. And the biggest thing? Every single rent payment is building your wealth, not some landlord's.
Let's make this really concrete. I want you to meet Sarah and David. Back in 2016, they were just sick of paying $90,000 a year in rent for their logistics business. So they set up an SMSF and bought their warehouse for $1.1 million. Now get this, their business kept paying the exact same rent, but now it was going into their own super fund, and it was only getting taxed at that sweet 15% rate. Over just 7 years, they saved almost $190,000 in tax alone. Fast forward to today, their super fund owns a $1.6 million property completely debt-free. How amazing is that? Their biggest expense literally became their retirement plan's greatest asset.
Okay, I know. That all sounds pretty amazing, right? But before you rush off to call your accountant, we need to have a serious reality check. This strategy is incredibly powerful, yes, but it is also jam-packed with risks and complexities. And getting this wrong, well, it can be absolutely disastrous. So let's flip the coin and look at the serious downsides.
First up, the costs. They're just higher. You're easily looking at thousands of dollars every single year for administration, for audits. It all adds up. Then there's the compliance. The rules are notoriously strict and complex. And here's a big one. Your money is locked up. You can't touch it until you hit what's called preservation age, which for most people is around age 60. On top of all that, banks are way tougher with these kinds of loans. They'll demand a bigger deposit and probably charge you a higher interest rate too.
And listen, I really cannot stress this enough. Compliance is completely non-negotiable. The Australian Taxation Office, the ATO, they regulate SMSFs so closely. There is absolutely zero room for error. Pleading ignorance of the rules is not an excuse they'll ever accept. Making a mistake here can be a very, very expensive lesson.
Want to know what that expensive lesson looks like in cold hard cash? A single compliance breach can slap you with a penalty of over $12,000, and that's per trustee. So if you're a couple, one little mistake could mean a personal fine of over 25 grand. And that's before we even talk about the ATO potentially declaring your fund non-complying, which comes with, frankly, catastrophic tax penalties.
So what do these rules actually look like in practice? Well, one of the biggest ones is that the property has to be what's called business real property. That's a fancy way of saying it must be used wholly and exclusively for a business. So no, you can't use your super to buy a house that just happens to have a home office in it. We're talking about a proper commercial or industrial premise. Another massive rule from the ATO is that the whole relationship between your business and your super fund has to be strictly at arm's length. What does that mean in simple terms? It means you have to treat your own super fund exactly like you treat any random landlord. You need a formal, written lease, the rent has to be set at a fair market rate, and you better be able to prove it. And you've got to pay that rent on time, every single time. No excuses, no special mates rate deals for yourself.
All right, so we've looked at the incredible upside, and we've stared into the pretty serious downsides. This brings us to the final crossroads, the ultimate question. After all is said and done, is this actually the right move for you and your business?
Let's do a quick gut check right now. Ask yourself these questions. First, do you have a stable, profitable business? You've got to have that. Second, what's your super balance looking like? You really need a combined balance of at least $250,000 generally speaking. That's kind of the minimum to make the cost worthwhile and actually get a bank to talk to you. Third, are you thinking long-term here? This is not a get-rich-quick scheme. And finally, are you genuinely comfortable with complexity and willing to pay for the right team of experts?
You know, this quote just hits the nail on the head. You absolutely 100% cannot just wing it with this stuff. Trying to do this without a rock-solid documented plan and proper expert guidance is just a recipe for disaster. You need a detailed blueprint before you even think about laying the first brick.
And that blueprint? It needs a team of architects. This is not a DIY project you can tackle on a weekend. At the bare minimum, you're going to need a specialist SMSF accountant who lives and breathes compliance. You'll need a lawyer to get all the trusts and contracts set up perfectly. And you'll need a lender who actually understands the unique and sometimes tricky structure of SMSF borrowing. This is a hands-on, active, ongoing commitment.
So there you have it, the whole picture. Look, it's complex, it's super highly regulated, and it is absolutely not for everyone. But for the right business owner, with the right advice and the right long-term vision, this strategy truly has the power to transform your single biggest business expense into your most powerful retirement asset. So the final question is, are you ready to start building?